Welcome back to Money Exchange. There is one currency trade right now that is in danger of becoming the most overcrowded trade in the market. And I'm speaking of the euro versus the US dollar. Mario Draghi, the European Central Bank president, admitted on Thursday core inflation had weakened, which gave traders more incentive to short the euro and anticipate the ECB will likely lower deposit rates and inject more stimulus. But the euro rallied back higher after his comments. Mawji, economist and senior currency dealer at Go Markets in London, joins us. Jay, they rallied the euro versus the US dollar back higher after dovish remarks from Draghi. Was or is the euro versus the US dollar in danger of becoming the overcrowded trade in the currency markets? What are your thoughts?
Hey, good morning. Thanks for having me. It is an interesting one. We would expect to see a much weaker euro on the back of the statements or announcement that were made. What you've got to bear in mind is for most of this year we've been selling the euro wherever we had the opportunity, pretty much in fear. And now all of a sudden we've got a situation where economic policy is aggressive or potentially aggressive, but at the same time we think that there could be some upside for the eurozone. Look at GDP figures coming out this morning and over the next few days. There's a possibility we could see some good news out of the eurozone. So it may not all be doom and gloom for the euro just right now.
So what are your thoughts, Jay, with respect to negative deposit rates at the ECB? What's the incentive for the European Central Bank to instigate negative deposit rates, a little similar to the Swiss National Bank? And what's the benefit that it's going to have for the eurozone by having negative rates if they decide to lower them further in December?
Sure. I think the key here is about money supply. The more money that we can have in circulation in the eurozone, the more it's going to be spent in areas that are going to promote good growth, wage stability, positive employment, and good all-round economic factors. By posting a negative rate, as it were, essentially banks are going to be less inclined to hold excess cash in their accounts or with the reserve, and they're going to be more likely to lend it out. And that's essentially going to help to produce money supply, which should in turn, by economic theory, increase the potential for economic growth.
So the market is anticipating a significantly lower euro. We saw Goldman Sachs. You may have heard me talking to Alex before about Goldman Sachs anticipating parity by Christmas. That's at the extreme end of things, and I know that you're not perhaps that bearish on the euro, but how far do you think the euro has to fall further before it really starts to have a significantly positive impact on the euro area?
Yeah, it's a good question. Firstly, I'm not sure if I'm the right guy to argue with Goldman Sachs, but having said that, we've talked about the eurozone this morning, and GDP wasn't as great as they expected. And one of the reasons is trade. And essentially, if the euro can keep coming away just a little bit more, it's going to help trade to grow in the eurozone. And as a result, when we see that start happening, then of course positivity returns to the market, depending on how much stimulus we have, depending on all the other factors that are priced in by the ECB. You've got to think about whether the US will increase rates or not before the end of the year. So depending on all that, we can see the euro fall a little bit, but will it fall all the way down there? It's a long way to go.
So in summing up on that particular trade, Jay, you do see the euro still a little lower than where we are now, is that right?
Theoretically, we should see that. We know Mario Draghi talks a good talk. There's a lot of fighting talk that comes behind it. I do want to pinch into a quote he did say here: the option of doing nothing would go against price stability. That is what will outline our strategy in the coming months. So if the ECB does act in the way we expect, then we should see a weaker euro. A lower, weaker euro, rather. I
saw in the news Mr Cameron talking about the vote to leave the EU. Has there been a date set for that, Jay, with respect to the citizens of the UK voting to potentially leave the EU?
I think there's a lot of posturing and positioning still going on. We know that vote's going to come. It's a little bit early to probably get a definitive day for it, but we're certainly lining it up to it. And there's a lot of pressure going around politically and economically for that vote. So it's something that's imminent now.
All right, Jay. Well, I know it's early there in London on Friday morning. Thanks for getting up bright and early for us. Really appreciate your time once again.
Pleasure. Thank you.
That's all we have time for this week. I'll look forward to your company again next week when we chat about all things currency. Until then, happy trading.